Good morning, guys. How's it going? We have in the chat. We got the Duncan, or the Duckin. Sorry. Good morning, man. Kulot. Good morning. Free Breaker. Loving the course so far. You're a stellar professor. Thanks, man. I'm glad you're liking it. When I've been trying to record the course as if I'm talking to my mom, which is she's a boomer. So if I can try to get her to understand stuff, then I feel I can get anyone to understand it. So that's kind of how I'm trying to approach the teaching kind of thing, in a way that most people should be able to understand it. Anonymous calling me out for being late, bro. The market's late. It's not doing anything. But we do have an opportunity to prepare for a long. So if we have, right now we're on the 5-minute time frame for Bitcoin, and we're at the bottom of this range here. We're below a value area low. We're kind of dipping into, see this area right here is a previous value area that we're kind of hovering above. And we've been using the point of control of that value area to pretty much blast us back into this local value area. Very similar to kind of like what I was talking about yesterday with the more macro version of that, right? Is this valley area POC was kind of launching the price for months in this daily range here. And now we're seeing a micro version of that here, which ironically is to drive acceptance into the same value area that did the same thing, right? It's almost like it's fractalized that way. It's interesting. But yeah, so right now, if we're looking at the TA today, it's gonna be pretty easy, guys. This is one of those days where you look at the charts and you immediately know what you're preparing for. We have price action, coming. We came down from the value area high, right? And we just need this change of character occurrence for a potential long position to target the value area high again. We're going to have some confluences here for resistance that we have to watch out for, which is this VWAP right here and the 10-minute order block. There's a supply concern here, so we just got to watch out for that little zone. And we have a concern here as well. But out of all the barriers along the way up, this is the main one that I'm worried about if we're driving our target to here. So I'm going to set an alarm for right about here at 94,040. In case you guys want me to look at other assets, I want to make sure that we don't miss out on what might happen here. Now the big thing as well is just to make sure that we get a really good stop loss guard. So here we'll get the change of character, but that usually induces a pullback, and we can use that pullback as our entry because we already have our confirmation when this breaks, right? So if we get our confirmation but we don't like our stop loss guard, then we just wait for the retrace, and we can use Fibonacci as a tool for that. So once we start getting that pullback, then we could pull a fib from this low to that high to define where we might retrace to, which might most likely be around here if we get that retracement. Do you worry about CME gaps at all? I do not worry about CME gaps. They're cool for confluence, and I understand why they're created and why they're significant, but I've been, if anything, they're good for confluence when you're starting your week, because time kind of makes them less and less valuable. So the more time that passes, the less I'm concerned about them. We have CME gaps down at $3,000 that were never filled, but the fact that what makes them so significant is the percentage rate of how many of them get filled. And that just comes with the volatility of Bitcoin, in my opinion. So I always consider them a little bit of a fairy tale for reasoning for preparing for a trade, but they do always get filled. So you can use as a part of your like statistical analysis, like the percentage factor of them being filled can be a part of an edge, right? But you should always count on market structure to find your entries anyways. So that's why I don't use them as part of my core rules, because I'm not going to be entering any trades unless market structure allows me to. So that's why I don't really factor them in. So we got Cardano request on Cardano request, yeah, and Audi. Kyle, your daily analysis helps me a lot. I don't overtrade, just want to announce like you. Well, thanks, man. God bless you and your brother for helping us. I appreciate it. Yeah, when you have a set of rules that you can live by as a trader, then you don't really need to look at anything else other than those rules. So I just stick to the same thing over and over and over again. You guys will, even if you don't join as a member, if you're consistent with watching me on YouTube, you'll get my rules down pat, right? Because I trade the same way every single time, especially when we're in ranges. I only switch to like a trend-based strategy when my trend-based rules meet, which also syncs with the same kind of concept. Like you need to use value areas to use my like trend trading strategy. So they work really well. One strategy tells the other not to trade. Okay, so that's what we're waiting for with Bitcoin. We're waiting for that change of character, a proper pullback, an entry on the higher high, stop loss guard on the strong low within the pullback, and we'll be targeting the value area high. Yesterday in the community, we jumped in on a short for Litecoin. It was an awkward one. We were shorting from the value area high, literally the upside down version of what we're preparing for, because right now we're creating a potential inverse head and shoulders at the value area low, and yesterday we traded a head and shoulders at the value area high. What we're doing flipped upside down is what we did yesterday, and this is where it kind of got awkward. We got the breakout here, acceptance into the value area simultaneously. See how we pulled back a bit, used the value area high as resistance, and we got the lower low. It wasn't a proper pullback, but that kind of acceptance, I knew that we're likely just going to come down to at least the POC as soon as that candle closed. And then our stop loss guard was the shoulder, and our target was the value area low. I moved my stop loss too early. So when we closed down below here, I moved my stop loss to the pretty much right below break even. And I put it there because I assumed a strong low was going to be created soon, or strong high, sorry, to guard my capital. And the fact that we had a massive sell wall, like build along this trend line. And I figured that sell wall would protect my order. I didn't think price would actually come up and combat the sell wall. I thought it would just influence price to go down like it usually does. And we never got the stronger low. We got a nice, decent pullback, but we never got the strong low to define a new location for our stop loss guard. We hit the sell wall and then we crashed as a result. So it was that feeling of being hunted. You know that feeling when you put your stop loss down, it hunts you, and then it goes to hit your target. Yeah, I kind of put myself out there to be hunted in this scenario. If I had kept it where it was, I would have been completely fine. I kind of sprinted in for a re-entry. I wasn't able to signal that because it was too tough to type and do it at the same time. And then managed to basically come out as if we traded a 1-to-1. Because I lost the 1 to 2 at the small. I basically lost fees in this setup, and then here I got the 1 to 2 kind of setup. My stop loss started here and then evolved to here. But yeah, that was yesterday. And right now, Litecoin's got a little bit of a deviation from the value area. And one thing we could look out for is potential like higher time frame swing failure pattern. It's looking kind of weak. So we'll keep our eyes on Bitcoin. I didn't want to trade very much of the other assets. I traded DOT. I didn't signal DOT. It was really wasn't contrarian, but I would say like it was a hedge against this short. If I pull up DOT, and I said I wasn't going to trade DOT, but I ended up trading it. It looked really picture perfect. So other than that wick that I talked about yesterday, I didn't really like. So kind of what we're seeing here, we already broke downtrending momentum. We started going range bound after that. We broke back into the value area. We got a retest the value area low. Then we got a confirmation of basically breaking this resistance and confluence of the break of structure. Basically giving us a lot of confidence, telling us like, all right, here's likely a rotation to the value area high. And I basically targeted a sell wall, which was right here at the time, but we ate through that sell wall after I got out, and I was like, oh, fuck, it's probably just going to leave. And then it ended up coming right back down. But yeah, that was pretty much yesterday. It was a weird day. So let's take a look at Cardano for John Blue Star. Cool name, man. Let's open up ADA. ADA is like a slippery fish, man. I used to trade this thing religiously. It's a trend trader's asset, usually. Okay, so we're on a 30-minute right now for Cardano. It's got some relative weakness against Litecoin. I say that because of the positioning, right? We got like this large double top structure. We were at the neckline of this double top structure. Potential range extension, right? Just a trade within a potential range extension. Cardano, however, is below that neckline level. And we've confirmed it as resistance already. And it looks like it's going to be coming down, potentially down to this previous value area low, behaving as if we're in this value area here. You got the value area high marked, the POC marked, and the previous value area low marked. If you want to zoom out and see where that value area came from, because I usually only keep older value areas in place if they have strong control of the price action still, and lots of evidence of it. And this little guy has been like having quite a bit of control over the price action. We've been honoring this value area every single time we get in it. We left that area that used to be used as support, and now we're coming back down, and it looks like we're approaching the value area low again. So I'm going to be marking the momentum of the pace of the sell pressure from here to here. It's going to give me an idea, if we're going to hit the value area low, roughly how long it's going to take for us to get there. And we've got the measurement tool over here on the left, and my screen's not totally on there. Let me a sec. I'm just going to move my stuff. There we go. All right, cool. I hope that's better. Sorry. Oh, yeah, 80, you mentioned it right after. Thank you, man. Yeah, if you didn't mention that, I probably would have forgotten my own. Luckily, I kind of remembered. But anyways, we got the pace of the sellers, kind of like defining luckily how long it's going to take for us to get to that value area low. And it says if we maintain this pace, they could take up to like a day and 4 hours. But we know how crypto is. Sometimes it speeds up the race a little bit, but that's the kind of like the minimum that we can anticipate, roughly around a day. So right now we are testing a local range that was consolidating off of a previous POC, and we're hitting it now as potential resistance. If we get that lower low, we confirm it as resistance, and then we can target down here. If there's proper R&R to that setup, you can take that continuation. We got buy shadow wicks here. So if we come back down to this area, you should also prepare for a potential local SFP. Mark these bodies and mark these wicks. Here we go. So SFP scenario would be price action dipping down, grabbing liquidity from below its wick, and the very same candle that grabs that liquidity closes back inside the range. And that will give you an SFP. And then whatever high that's defined here becomes the SFP initial target. And then you find out if the R&R is worth it there. And if we break that level, then you have your continuation to stay in the trade. That's Cardano. I hope that helps you out. Macro wise, I do recommend trying to prepare to accumulate at these lower levels, just because of the fact of it's getting a lot of exposure from the government. This might be a winner for a longer term hold. The inflationary rate, I'm not 100% certain of, but we do know that this is how much has inflated since our last market cap analysis on it. The market cap analysis is basically stating that if you put the exact same amount of money in Cardano that was at the all-time high today, it would be worth $2.11 because of the inflationary damage from its growing supply. Make sure you're always adjusting your all-time high, quote unquote, targets. A lot of people like to target the all-time high for long-term holds, but you need to be aware of the inflation that comes with some assets in the crypto space. That's not something you normally have to worry about with stocks, but you do have to worry about that with crypto for sure. Spot buys at 62 cents, assuming a bounce. Never assume a bounce, but you can prepare at key levels like that. I have a key level at 52 for an extreme low. 62.75 for a value area low. So you can do a spot buy if you want. I usually reserve the use of spot for my long-term portfolio, but if you use spot for short-term trades, that's cool too, because you're going to be getting a hell of a lot lower fees than everyone else. And it's raw gains. And some people, for religious reasons, won't use leverage, which I completely understand. So spot's also great for people like that too. So yeah, 62.86 might be good for a buy, but if you're going to be doing it because you want to use it for a longer term or mid-term portfolio, make sure you're buying on a position of strength so your money's working for you right away. So wait for the change character confirmation of a reversal off this value area low. Use the confluence of a change of character, use the confluence of a break of momentum, and the bounce off the previous value area low. So you have at least 3 forms of confluences for that entry. And then you can target, your initial target would be the value area high at 68.13, but you have to be very mindful of what could occur at the POC. That's the strongest point of interest. Okay, so that was Cardano. We got a request to look at SUI. I'm going to take a peek at Bitcoin, see what it's doing first. Nothing much. It's potentially starting a pullback, which would be great because then we'd have a stop loss guard for the trade. Just need 2 red candles. SUI. All right, SUI's on a downtrend a bit. This is a key level we talked about yesterday during the live. If this broke, which we kind of didn't want it to break, but if it broke, it would at least give us a target of the low of this demand zone. And then we went straight there and then came back up, double topped against this as resistance, confirmed the double top shortly after with this full body acceptance and lost the VWAP. So we had quite a bit of confluences to jump in twice, right? And then again, hit the low of that demand zone. And now we're at a previous point of control. The downtrending momentum is here. We got broad momentum, and we have evolving momentum. But this one you don't really need to mark unless you're in a short. They're helpful if you're in an active trade, because if you see momentum break, it's telling you that the pace of the sellers have shifted, and it could be a warning sign to get out of an existing short trade. So SUI, kind of what we're preparing for with Bitcoin. If we want to have that reversal, we need this change of character occurrence here at 2, like our wick levels are here, 327.10. That's the 15-minute time frame. So if we break out, be patient, wait for the pullback, and then you could take the entry on that. Be mindful of the momentum, because sometimes sell orders in the order books will chase trend lines, right? They'll chase trend lines, and they'll almost always be directly above the active candle, right? And so you can use your crosshair tool on your mouse to help determine where sell orders might be. So $3.33 might be a key area you should watch in the order books and see if there's a massive sell wall there. And if there is a giant sell wall, then that's validating the trend line, and that could help suppress the price action to stay low. But that is SUI on the short term. I don't know if we spoke much about the macro on SUI yesterday. We do know that 371 is a big key area. It is the average of the previous rally that we had for holders. So we had a lot of people exit as soon as we came back, most likely close to break even. So we can delete this. That's kind of already came and went. We can delete this one too. That short came and went too. Now we're about preparing for a long. And there's some confluence here with Bitcoin, which is nice, right? We got the inverse head and shoulders preparation for Bitcoin. We've got the inverse head and shoulders preparation potentially for SUI as well. All right, cool. So that's SUI. Hope that helps you out, man. Newbie tip: avoid trades during Wednesday. Live Fed meeting. Wicks are wild. Yeah. That's a good tip, man. The Wednesday, we're talking about funding rates potentially, and that's a big subject. So we got a little bit of time in the morning to prepare for something like that. So I usually will enter a trade if we have meetings later in the afternoon, and if we have some distance away from my entry, then I feel fine. But if we don't, then I sometimes will close my trade early, because you are right. The price action is very whipsawy all over the place. Whenever Powell says a word, people trade off of that word. It's just stupid. But yeah, so that's a big thing that we got to prepare for in terms of news this week. And we have unemployment claims on Thursday, which is also pretty big. All right, so let's go back to Bitcoin. What else we have in the chat? What time frame is the FRVG on? Where do you pull it? Oh, so the time frame isn't supposed to influence how your fixed range volume profile pull behaves. You can pull it on any time frame, and it's supposed to sync with that time frame. However, over the last 3 or 4 months with TradingView, it hasn't been syncing properly all the time. So that's also an importance to marking the levels like this, using a horizontal line, a horizontal ray, to define your high, to mark your value area high and your value area low. Because sometimes when you switch between time frames, it kind of breaks the tool, and it's not supposed to. It's supposed to be in sync with every time frame. So it doesn't matter what time frame in the utility of how it's actually how it actually is made. So it doesn't really matter. But how I define my polls is a beginner-friendly rule that I've been teaching is like a 2 chalk rule. If you have 2 changes of character occurrences within the time frame you're looking at, then you can use that to define a safe valley area to start trading off of. There are young valley areas, and then there's aged valley areas. If you have at least 2 changes of character, you have like a mature valley area that you can trade off of, because we have a defined high, we have a defined low, and the valley area data will sync with that, and you'll be able to use that as part of like the rules, especially the rules that I use, or anyone who uses valley areas for a part of their rules. That valley area is like more mature, and your win rate increases the moment you have 2 changes of character within it. However, that requires an insane amount of patience for some people. So, let's see. But for me, like, there are times where I just know when it's appropriate to pull a fixed range. Like my first change of character occurrence, especially when we already had like a previous valley area in that area before. I will, or if there's a demand zone that I'm aware of, if I see like an impulse move and then a base created and then a range created above or below it, then I'm going to be able to prepare for that becoming a demand or supply zone within a range. And I say that I'm trying to find a really easy example for beginners when I say it. I guess this is an example here, but it's pretty extreme. We'll use this. So we have it's not a very clean example. So if we have like price actually come up really quickly, build a base, then come up really quickly again, then you kind of like build like a little demand zone in that area. So if we return back to it, we typically bounce off it, especially if it's our first time. This eventually became like a larger little demand zone that I'd watch after like this change of character occurrence. And during that moment, that change of character, I'd pull a fixed range. And this would be a core area of interest, most likely the POC, even at the beginning of this area. So I pull, let me just readjust this. Yeah. So this would be like the value area high, change of character, well, maybe not a change of character, but double top confirmation. And I'd watch the POC along the way. And then I could potentially target the value area low, but it's too young for me to trust. So the POC is like your core area of interest, especially in very young value areas like this. But the 2 change of character rule is really good for helping you define when it's appropriate to use a fixed range. They're a lot more trustworthy. I got a whole course on that a whole lesson that inside the course, there's a whole day that's dedicated towards learning value areas. All right, we got a decent pullback. Hopefully not too harsh. When we go to the low to this high, we're coming to the golden pocket, so we might get a bounce at this zone. Some people will use these pulls and dissect it in the very low time frame and wait for like a 2-minute or 1-minute change of character occurrence, and they'll jump in to front run the potential break of this level, but then this would be your core barrier. I don't typically trade like that. The fees are just insane. It depends on the percentage value of the gap. Okay, so what we got in the chat? Kyle, I'm applying your teachings to smaller tokens in AI and meme sectors, even down to 5-second Heikin-Ashi candles, and the fractalization goes deep. Your techniques have already allowed me a W. Well, that's nice, man. I am going to tell you to be careful with Heikin-Ashi, though. So, like, Heikin-Ashi candles are great for some strategies, but a lot of people will trade with Heikin-Ashi without fully understanding what they could do to your indicators or like what they could do to your entries if you're making your entries based off of them. Because I'll switch to Heikinashi. Like Heikinashi candles are based on average of the previous candle, which defines its opening, right? And they're friendly in the sense that they help you detect the trend much easier, right? You can clearly tell without an understanding of market structure, which you cannot properly use with Heikinashi. You cannot determine a change of character occurrence without actually knowing whether or not it is an actual change of character, because it's in sync with averages. So you gotta be careful. And what it does to your oscillators is that your oscillators are pulling data from your candles. So your oscillators will sync to how your candles are behaving. So some oscillators improve because of it. Some oscillators get butchered because of it. So just be aware that you're also changing the behavior of how some of your indicators work. But nothing against them. If you have a solid set of rules that give you like a proper win rate and all that stuff, then you go for it, man. You just want to like make sure you're aware. That's a pretty harsh correction here. If we get the lower low, then we could use this as our key area. And we have the confluence backing of the POC on the neckline. If that breaks lower, yeah. All right. Can we check Solana maybe? Yeah, let's do it, man. Let's take a peek at Solana, see what it's up to. Solana to me is like the one that got away. I was like back when the FTX crash happened, I saw it at like $16, but the liquidity for Solana got butchered. It's absolutely just demolished at the time. And they must have got VC funding or something like that to repair their liquidity, because it was absolutely terrible. And I didn't buy because of that. I didn't trust that it could recover. And boy, did it ever recover. I still have some Solana, but it's not like I probably could have had a heck of a lot more if I bought it around $16. My average is around like $70. Let's delete this. Don't need that anymore. So here's a good example, actually. We were talking about when's it like a good time to prepare to define a range location. When you have your first change, like opposing change of character, you look around for a demand zone. And this is demand zone here. We had this very clear impulse move, built a base, another impulse move. So you'd mark this zone immediately. And if you have an opposing change of character go against you, use that demand zone as a potential target. Or at least prepare for a bounce or reversal off it if you didn't get like the clear short. Like here we had like an SFP, right? We had a really clear SFP. This is the body that you'd mark. This is the wick you'd mark. We came up, we grabbed the liquidity from above that wick, and we closed back inside the range. Unfortunately, where we closed would probably keep you from entering that trade if you use the 15-minute time frame. There might have been an opportunity at lower time frames, but the 15-minute time frame, your target was already almost hit, because this is going to be your core barrier along the way down. But if it breaks, that obviously gives you a sign of a continuation, and then you can start targeting like lower areas. So we have this little demand zone you target here, and then if we broke that, you target the next one. And then that demand zone helped define the range going forward. And right now we are leaving it. So we basically used the value area high as a form of resistance. We got the downtrending momentum maintaining its pace. We got some negative space from how it's drawn. Like you could kind of get it in line, but really what defines like the accuracy of your trend line is like seeing the order books and seeing if the trend line is being honored by other traders with their limit orders. because people will just try to catch the knife on their shorts. And those undercuts is what basically helps define the structure that's created. But normally, a market maker is the one that's trailing these lines to basically manipulate price to be suppressed. And they'll do it with usually with as high as like 2,000 Bitcoin worth of the asset. I don't know the exact number value for Solana, but if it's around $40 million, you can pretty much assume that's an institution or a market maker. Yeah, so we lost his uptrending momentum here. We came up, used it as resistance. We grabbed all the liquidity within that uptrending support. And now we're on our way down to this POC. So I'll be waiting for the confluence here for potential reversal on Solana around 140.32. We have a previous POC there. If we break this, we get acceptance into that value area, and we could behave off of the same way we did on the previous value area, which could bring us down to 135. We have the confluence of like bearish continuations. If this liquidity from below here is used as sell side liquidity, it can help drive the price down, but it could also be used as buy side liquidity, which is more likely. It's more likely to give us be used as buy side liquidity, because liquidity can be used for both sells and buys, right? Even if it's below the price. So you got to prepare for both scenarios and not assume that we're going to get a continuation or a reversal. You got to wait for the structure to define it, so you can see how the liquidity is being used, like what's the behavior suggesting. So this is going to be a key area, more likely to reverse, but don't cross out the fact that we could go down. So that's Solana. I hope that helps you out. Just let me know. Cheers on the Heikin-Ashi candles. Which style candles do you recommend for a 5-second time frame? That's the first time I've ever been asked that question. I'm just going to suggest regular candles in general. You can use Heikin-Ashi to define a trend, to help you define a trend. A lot of people use Heikin-Ashi on like the 4 and 6 hour time frame, and they use the candle color to define their bias for their day. But I normally would recommend like normal candles. Unless there's like more data between other candles that assist you with your trading style. And there's like footprint candles that are helpful too. They include a lot of like volume data within them, if you have access to something like that. I think they even have like sessions profile candles now, which is pretty intense. I played around them all at least once before, like interested in trying to figure out like what is the magic thing here? What's the magic indicator? What's the magic candles that can make you rich, right? Like I did all that crap when I first started trading, chasing all the bells and whistles, and then to find out that it's much less convoluted than that. Like once you have your rules set up, you just stick by them like a video game. Okay, so we got the lower low on Bitcoin. So we can define this as our change of character occurrence. This became our strong high. Which means we've gained a slightly more R&R towards our potential R&R towards our value area high. And I like that we're giving the VWAP some time to catch up. And we're driving the VWAP down. And the more time we have below this level, the more time we have the VWAP to merge with our level and give us additional confluence of our break. So if we break this level, we'd have the confluence of getting acceptance into the value area, breaking the POC, breaking the VWAP, breaking the downtrending momentum. So like this is kind of like one of those moments where the stars are like slowly starting to align to prepare for our entry. Yeah. Okay. So Runway wants me to look at Pengu. Pengu. Runway win rates. Confluences between your wins and time. Pre-market hours. Post-market hours. So I know that my win rate is lower on Mondays and that it is lower on Fridays. My win rate is much higher between like, I call it like the two T's, between the two T's, like Thursday and like Tuesday and Thursday. So if you want to listen to me more on those days, then, the probability suggests it, right? Even though yesterday was an okay day, like for me personally in trading, but with signals wise, the Litecoin thing was a little messy. If people followed me to the T with like some people didn't move their stop loss like I did, because I'm going to post everything I do for the transparency, right? And some people followed me with that move and they got stopped out and they may not have been able to jump back in. Other people didn't move their stop loss and they did really well. They just had their targets hit. And that was a Monday thing. Maybe it's just me trying to get back in the game every Monday. I don't know. And there's also the fact that like I've been giving signals as not like when InvestiShare started, I built it originally because I needed like a group of people, of like-minded people, like to work with. It wasn't like a paid community. It was more like a community of people that are just working together to try to figure this crap out. And then eventually I figured the crap out, and then everyone's like, you should charge. And so the community is the only reason why I charge. And then I was like, then I started using the money to enhance what was made. And that was like hiring a team, hiring a developer to help me with building tools and stuff like that. But yeah, my win rate's higher between like Tuesday and Thursday, and my win rate is higher if I do not trade after 5 p.m. The liquidity dwindles after 5. So you get more slippage. You have less trade participants backing your trade idea, less volume. So, but there's sometimes like there's those clear entries that you just can't ignore no matter what time it is. And those are the ones that usually run like crazy while everyone's asleep. And you wake up in the morning frustrated that you missed something. And once in a while I'll jump in on it because I'll have my alarms set up on these key areas. And sometimes those alarms will go off at weird hours. But I'll take it. I do have to leave in 10 minutes, guys. I have a coaching call with the community. We're doing trade hunting for about 2 hours, trying to find stuff in the market, just like we are now. But yeah, I got 10 minutes. But what you're seeing now is kind of like what we're going to likely be preparing for, but we're going to be talking amongst each other and see if there's any other stuff that could work in confluence with this. We had a request to look at Pengu. I'm not sure what that one is. It sounds like a meme. I think Pengu, I believe, was a game back in the day. Is that like Tokyo? It's Japanese market. Yeah, the Asian market starts around like at 8 p.m. Eastern, I believe. The time zone shifts always gets like joggles my memory a bit, but I believe it's 8 p.m. now. The Tokyo session, they're usually burst traders. They use mechanical-based strategies to define like a direction, and they usually go crazy that direction, and then they like stop. And so yeah, Tokyo session, you normally get like a burst of volume, and then it kind of like usually dwindles after that. All right, so this is the Pengu token. We've got a little demand zone here that wasn't fully mitigated. Template, long buy, visual orders in the back. There we go. We got down trading momentum. we're getting lower highs. So it's telling us that the sell pressure is increasing and we're getting squeezed against this demand zone. But the good news for any holders of this asset is the fact that like how this range is being built is giving us a higher probability of a move to create a higher high soon. We've been grabbing liquidity from below us, but we've been stacking it above us. So the probability of going up increases the more we stack more and more liquidity above us without taking it. So we got to prepare for potential market maker action to chase after liquidity, use it as exit liquidity, and then potentially define a correction after that. We've had a pretty harsh drop here, which could lead to just as quick of a recovery back up. We got some fair value gaps to be filled. We're at a value area low. So we're basically just waiting on structure to help define a reversal. We could have the reversal here, but preferably we would have it just below the value area for that better R&R. We'd have to watch the POC along the way up, and you can target the value area high up here. Watch the pace of the momentum and see if there's anything in the order books that align with it. Because here there could be a giant sell wall trying to suppress the price action down. Let's zoom out on this because it was very local price action. Okay, so this is one of those ones that are young that just broke their 50-day EMA. There's a lot of meme tokens that have been waking up a little bit lately with their daily changes of character occurrences right at a 50-day EMA, and they usually run up to, some of them are running up to a 200. Some of them haven't even have enough time to develop a 200, like this one, for example, does not have a 200 yet. But price action is sometimes really sticky to these 50 and 200-day EMAs. If we end up breaking the demand zone, you should watch the 50 as your primary target in confluence with this demand zone here. So I'd mark the bottom, the low. If we mitigate this full area here and we don't get the recovery, in this area we could define structure for reversal in confluence with that 50. But yeah, locally, right now, we're in an area where you want to prepare for longs to target at least this downtrend momentum or the value area high. Going back to Bitcoin. Cool. All right. We got a 15-minute proper pullback. So now we have the confluence of multiple time frames for this being a key area right here. So if we break this on the 5, we break this on the 15. Okay, I can't read that one out loud without getting demonetized. Hanging with Kyle's AM is the new TA ritual. Learning so much so fast. Nice, man. How do Gold Finova members get access to the TradingView indicators? I have to figure something out for that because it's all kind of like merged to the InvestiShare system. I'll get back to you on that. I know you're in the Discord, so I can reach out to you when I find out that answer. Let's see. Great advice on the candles. What candle is your Bitcoin VWAP anchored to? The origin candle. I'm not using an anchored VWAP. I'm using a daily VWAP. So it's in sync with my daily candles. So it starts the moment the day starts. Right here, for example. So this would be like the origin. Right here. Or, no, sorry. Yeah, I'm right. Okay, sorry. This is the new daily. This moved so quickly that it looked like a VWAP reset. So I just want to make sure that this was proper. So right here is the reset here. You can use anchored VWAPs too. They have a different purpose. When you're pulling an anchored VWAP, you can use a trend-based VWAP like this. You start at the high after you confirm the change of character occurrence, and it can help you define the strength of the trend. It could tell you where a key barrier of resistance could be. Some people use it as confluence for an entry. They will not enter a contrarian entry, which is like going against the trend until the trend-based VWAP breaks. Some people merge them to the month so they can see like where the monthly VWAP is. Some people merge it to the year so they know where the yearly VWAP is. There's tons of use cases for an anchored VWAP, but I dominantly use just the daily VWAP. How can we take part in the trading bot NFT system? So the trading bot, so the NFT is likely going to be released before the bot is. I'm going to be adding more than just a bot for its utility, but the NFT. So what I want to first do, because there are people that are going to be receiving the NFT because they bought an automated trading system from me before. So they're going to be receiving that. And then they can choose to sell on the open market or not. And then that's how you'd get it. You basically buy it from like something like OpenSea, and then your NFT is going to act like a key to a gateway that will allow you to have access to all the utility that comes with it. And the utility is going to be the automated trading bot that we've been working on for a while now. And other stuff that I don't really want to bring up just yet. Can you need to find out how to eliminate your mouse clicks on the mic. Can you hear the mouse clicks? That's kind of funny. I think I just need to move the mic further away from the mouse. Will Fanova Discord members be notified? Fanova will be notified shortly after. Yeah. The InvestiShare side will be notified first. And then once all the dust settles, then I can notify like the Fanova community. Okay, guys, I have to go to the next call. I hope this all helped you out. This is our new key area. It evolved during our live. We started watching here. Then we got a new strong low after rejection off this POC. And we are hopeful for a potential reversal here. And this is our key area for a long to bring us to the value area high. There might be some front run opportunities down here at this POC. However, if you jump in on a front run opportunity, this is going to be a barrier for your entry that needs to be broken for the continuation. Trade safe, guys. Have yourself an amazing day. We have a trading tournament going on if you guys want to join. There's a link down below for Blowfin, and you also get like 20% off your trading fees returned back to you as like cash, like USDT. So it lands in your account 6 hours after your trade closes. But yeah, we're having a tournament for up to $10,000 trading pool. So if you guys are interested in joining us, you can hop in. You don't have to be a member to join us in the tournament. But yeah, have a great day. I'll see you guys during tomorrow's live, and hopefully we are able to jump in on something during the live itself. But at least we got something to prepare for today. I'll give you guys a signal when I'm going to be entering or what stop loss I'll be preparing to use when this breaks or if it breaks. And yeah, have a great day, and thanks for watching.